Bloomberg Audio Studios.
Podcasts, radio, news.
Scott Bessent of Key Square Group joins us around the table for more widely considered to be a potential Treasury Secretary pick. Scott, good morning, sir.
Good morning.
It's good to see you. Thanks for coming in. Thank you very much for being with us. Let's start with an easy one. Why do you think that one is a bad idea? The capital gains tax.
The capital gains tax. Look, Kamala Harris is an economic illiterate. Donald Trump is going to give an extensive speech at the Economic Club of New York today. He's going to take questions. She's reading from a teleprompter. And, let's just review here. The capital gains tax will be after a proposed tax on unrealized capital gains, which in the scheme of the new taxes has to be one of the worst tax ideas in 30 years.
Let's talk about how the former president, perhaps future president, might counter that. What are his policies?
Well, I think you're going to hear from President Trump today. You're going to hear a warning that the Harris-Biden administration caused the great inflation. Vice President Harris was the tie-breaking vote on both spending bills that led to the inflation. The inappropriately named Inflation Reduction Act and the American Rescue Plan. They would not have passed without her signatures. I'm still not sure that she knew what she signed, but she did sign it. And, all these policies that she's talking about now, are going to ignite inflation again. Because what happened last time was we got a demand shock from government spending that was met with high levels of regulation, and that's the recipe for inflation. In Trump 1.0, we got a demand shock from the private sector fueled by the tax cuts, and that was met with deregulation, and that's why we had non-inflationary growth. President Trump's going to talk about that again. He's going to talk about energy dominance. He's going to talk about not only stopping the inflation rate, but getting prices down, which I think is very important for the American households. We're in an affordability crisis, and he's going to address getting the deficit down. I mean, we are at 7% peacetime, non-recessionary deficits, and it is clear now, I think I said it last time when I was here, I've been saying it for about 2 months, that the economy is slowing dramatically.
Scott, how do you get the deficit down when, if you look at Trump's policy proposals, floating a corporate tax rate of 15%, campaign is also floating excluding Social Security payments from taxes, exempting tax on tipped wages, also increasing the child tax credit. All of this is going to add to the deficit. Plus, tariffs, which some economists will say is inflationary.
Well, let's unpack that. There would be income from the tariffs. Right? So, that's a big number.
Well, that's debatable, though. Some say that's just going to be passed on to consumers.
Well, all taxes are passed on to consumers. And I think what's interesting about taxes is they aren't necessarily inflationary. They're a one-time administrative price adjustment. Historically, 40 to 50% of any upward impulse is reflected in the currency, so that would offset it. Then we have the various preferences by consumers. It could end up in foreign manufacturers' margins. Their margins could go down. Their elasticities, consumer behavior can change. But in terms of getting the deficit down, I have been talking about it before. I think we would freeze domestic programs, except for defense. If you look at the Harris-Biden proposals, and she hasn't walked this back yet, maybe she will, they're calling for a 21% decrease in defense spending. I can't imagine a worse time to do it. The only thing that I believe, and again, I don't speak for the campaign, but the only thing that I believe that should have real increases is defense. The Inflation Reduction Act is the doomsday machine for the deficits. It was originally scored at a positive score. It was supposed to be positive 50 billion. Then it went to 300 billion. It's probably going to be $1 trillion this year. And it's now estimated over the life of this thing that it could be a $4.5 trillion hole in the deficit.
So hold on a second. Does that mean that you expect Donald Trump to try to unwind it?
Put a halt to it.
Okay, but not unwind it.
Well, I'm not sure what unwind means. I mean, you're not going to level the 8 charging stations that we got for $8 billion.
I guess here's the question, and this is the reason why you had the Congressional Budget Office come out saying that Donald Trump's proposals will actually increase the deficit more than Kamala Harris's. We had a story on Bloomberg talking about how potentially Donald Trump's proposal could increase the collective cost as much as $10.5 trillion over the next decade. I mean, how do you offset that?
Well, first of all, and you all know that Bloomberg is one of my favorite venues. But I do have to say that story yesterday in the $10.5 trillion was poorly written, poorly edited, and compared apples to oranges. The $10.5 trillion was everything Donald Trump and J.D. Vance have ever said, and they took it to the highest end. Then they took a score from the Wharton School and said, well, this is the Harris budget or the Biden-Harris budget. It's apples and oranges. If we were to take everything that Vice President Harris, including what she said in Raleigh, $25,000 for housing, including for new arrivals, that would be substantially in excess. So,
but the Democrats and Biden's budget now and Kamala Harris as part of this administration have revenue increases. Where are the revenue increases to offset all of these tax cuts that Trump is talking about?
Well, look, I think there are pay-fors here. Right? So it's to cut spending. We do not have, Annmarie, we do not have a revenue problem in this country. We have a spending problem. So traditionally, the government revenues, federal government revenues, are 17.5% to 19% of GDP. We're right there now. Since 2000, we've averaged about a 3% budget deficit. So spending has been 21, 22%. This administration, led by Vice President Harris, has blown out the spending. We're at a 7% budget deficit right now, and what do we have to show for it? We had we had the employment numbers revised down by 800 or 900,000 jobs. We had 250,000 private sector jobs. So the idea here is what we have seen with Harris-Biden. It's what's called in Grand Prix driving, two-footed driving. You've got one foot on the accelerator. The Fed is putting one foot on the brake.
Scott, forgive me because I've got 10 seconds left. I don't want to cut you off, so just stick around. Scott Bessent of Key Square Group from New York. This is Bloomberg. Typically, we talk to Scott Bessent of Key Square Group a lot about politics, given his potential to be the next Treasury Secretary. Scott, we've also got to talk about what's happening in this market because you've got positions in it. I know that you've been long gold, you've been long the Japanese yen. Are you keeping those positions?
I am, and thanks for focusing on my day job. I think in the Japanese yen, it's an extraordinary opportunity because as central banks around the rest of the world are in an easing cycle, Japan, for the first time in almost 2 decades, is in a hiking cycle. So, we'll see if they're like cicadas, they only come out once every 17 years, or whether this turns into a real hiking cycle. My thought is that there is the potential for this to keep going.
So you want to keep riding this trade. We're at 140 now. We were pushing through 160 previously. What kind of numbers have you got in mind?
Well, it's two sides to this. Japan is strengthening, inflationary impulse is picking up. The other side is, as I've said, the U.S., I believe the U.S. economy, I said it recently, is buckling, and we're starting to see it in the numbers. I think it's both industrial numbers and labor. And I think what's funny here, on the Democratic side of the aisle, and I will put politics back in for a minute, they've been screaming for a rate cut all year.
Yep.
Now, even Claudia Sahm, who's been chewing off her arm since February for a rate cut, doesn't want to come out and say, well, my rule got triggered, and anytime my rule gets triggered, we're in a recession. So they don't want to use the R word before November 5th.
So the longer Nippon Steel waits, the cheaper this deal gets, right? Essentially for them.
Well, yes, exactly. They may have, through some terrible timing, get a better price. We'll see what happens.
Walk me through what you think should happen, and let's finish there. Harris says she wants to block the deal. Biden's given the signal he wants to block the deal. The former president's given us the signal he wants to block the deal. The company has come out to the Wall Street Journal in the last 24 hours and say if you block the deal, job losses are on the table. We're going to be moving out of Pittsburgh. How do you recalibrate the policy now with that in mind?
Well, I think we've seen, and it was very surprising because I've been going to Japan since 1989, and Japanese companies traditionally have a very high regard for all stakeholders. I remember the first time I went and talking about shareholder value, and they said, oh no, Bessent-san, we have our customers, we have our employees, we have our banks, we have our community, and the shareholders are last. And now they've reversed that. They're putting shareholders first. And I was surprised to see a Japanese company that didn't check in with the U.S. stakeholders. They didn't check in with the community. They didn't check in with the unions. They didn't check in with the customers.
That's the mistake they made, Scott, and this is where we are.
Yep.
And now we've got to deal with the policy on the campaign trail. Are we going to offer them state aid? How do we keep this company in business in a way that doesn't end up with job losses?
Well, look, I think that maybe the deal will be resurrected. Cleveland Cliffs actually forced Nippon Steel's hand with their bid, so maybe a domestic buyer will come back.
You don't see space for state aid?
Sorry?
You don't see space for state aid?
Well, I don't see why we need it right now. Look, we did state aid with Intel, and Intel just laid off 15,000 employees. The stock's down 60% this year, and they're probably going to be pushed out of the Dow.
They got their own problems. Scott, it's good to see you. It's nice to touch on markets too.
Yeah.
Let's do that again next time.
I like
Scott
my day
Bessent
job.
at Key Square Group. We like your day job too. Thank you, sir.